Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, the Russian invasion of Ukraine continues, while the rest of the world hopes for peace. Our jobs report came in today at a surprising increase of 678,000 jobs added. The expectation was only 440,000. But the best piece of the news, in my opinion, was the fact that wages held steady for the month. We've got a lot of inflation being created from energy prices going up, so it's nice to see that maybe wage inflation is starting to calm just a bit. It's only 1 month, so we'll see if there's a trend here. And interest rates are going down. What's up with that? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. When we take a look at the charts of the market, you can see that we had a little bit of a gap down this morning, and it kind of filled that gap almost, not quite all the way, but pretty close, and finished with a bit of a doji on the charts. Interestingly, if we switch over to the weekly chart for just a moment, you can see that the week finished with a doji as well, almost a perfect doji, kind of bordering awfully close to a gravestone doji, so that foretell that there's more downside to go. Obviously, we'll wait and see how that all plays out. I think next week is going to be really interesting, maybe starting off really interesting with the fact that we have a doji here on Friday's chart, and then we have a doji for the week. So we've had a lot of volatility. Doesn't look like it's going anywhere anytime soon based on those two chart patterns. If we take a look at the 10-day moving average, you can see that we are trading back below the 10-day moving average. We had closed right on top of it on Thursday and above it on Wednesday, but now we're back below it again. And we're consolidating here in this 430 to 440 range. And if I take the moving averages off, I think you can see that we're creating a bit, it's a crude one, but a bit of a triangle, which is also backing up the fact that we have this kind of consolidation going on in this range between 430 and 440. So not a bad looking symmetrical triangle, not the best one, but one to pay attention to nonetheless, I think. Now you can see that we don't have an impulse pattern labeled. We finished that wave 5 back in the beginning of January, but the zigzag pattern is still in place. So we can look for continued move to the downside. Perhaps if we break to the downside out of that bit of a triangle that we have, that could put us right down to that C wave extension. Remember, triangles though supersede anything in my opinion. You always have to respect the fact that a triangle could break either direction. Looking at interest rates, I mentioned in the intro that interest rates had moved back to the downside. We talked about this Tuesday night in our TradeFinder meeting. And by the way, if you haven't attended a TradeFinder before, I invite you to do so. It's free. You can sign up in a link underneath this video or go to our website at ewotrader.com. We talk the markets. We look for trade ideas. We do a live Q&A. It's a lot of fun. Love to have you. And one of the things that I was talking about is I just don't think we're going to break below this area here at 17 or roughly 1.7% on the 10-year. Why are we back down? Well, I think that's money moving into bonds because of what's going on globally with the war, etc. Interest rates move to the upside, and now we have this premium coming in. People buying bonds due to the fact that it's a bit of a safe haven trade at the time. So you can see that we have support there at 17. We also have that wave 4 right at the 38.2% fib level. Now, I've been surprised by the markets before, so if we break through there, we could come all the way down to 15. But I would be surprised if we didn't hold in this area. And you can see here that we also have a break below the 50-day moving average, which is interesting as well. One more thing that I wanted to show on the weekly chart, if we take a look at the moving averages there, not only do we have that doji for the week, but the doji is dead smack on that 50-day moving average. So I wanted to add that in there. Taking a look at the dollar, I had mentioned this a couple recordings ago that the dollar just wasn't making sense to me when we were consolidating through here. And when you have these discombobulations, if you will, in the market, they don't usually last long. And the fact that rates were going up, the Fed's going to be withdrawing liquidity, raising rates, all the uncertainty going on globally, had the dollar lost the reserve status of being the reserve currency when things were concerning around the globe? Well, that's all been fixed now over this past week with this big move to the upside. And right there in the Wave 5 forecast here in this tap box, time and price projection. So you can see we have a virtually 61.8% fib extension right smack in the middle of the targeted wave 5 box. Now, I had surmised that if we got this far, would we stop and not go to 100? I think we can likely get there. We're nearing parity on the euro, which is fascinating for you currency buffs. And then if we take a look at the 10-day moving average, you can see the dollar's a bit overbought right now, so perhaps it rests a little bit at the beginning of the week too before deciding whether it is going to go up and hit that 100 level. But that would be a pretty interesting scenario if it did, but perhaps a little bit of a rest first. Staying with the metals that we've been looking at over the past couple of weeks, gold continues to power higher. As I mentioned, we took our gold position off just before the war was declared, and obviously, trying to find another entry point there. Look at the 10-day moving average, a little bit overbought, not that significant. Still have this wave 5 target up here in the 190 range for GLD. We do have an alert position on for our subscribers on silver, and if you take a look at the chart of silver, I'm going to show you the DMI on both gold and silver here in a second, but wanted to show you the 10-day moving average first. Maybe a little bit more overbought. We talked about this in our insiders meeting last night, that we had a little bit of a triangle here, just a small one on silver. By the way, if you're not familiar, the insiders meeting is one that we have every Thursday night. That's for our alert subscribers only, and we do a live Q&A there. So we talked about this, and there's the breakout right out of the triangle. Elliott always said, don't forget the small triangles. Everybody focuses on the big ones, but don't forget the small ones as well. And there was the breakout. Now, when you look at the DMI, it was pretty tempting not to take that trade off today because it's doing really well, as you can imagine. But when you look at the DMI, it's still a pretty strong setup. We have the ADX moving in a nice almost 45-degree angle, great separation between the two directional indicators, and we haven't even gotten to 30 yet on the ADX. So it does look like we want to run up and hit that wave 5 target there. So we wanted to give it a little more time to move to the upside, even though there's a nice gain in the position currently at this time. Now, if we go back and look at GLD and add the DMI on, you can see the DMI is a little more mature with gold. The ADX is above 40, which is usually a point where it starts to show the strongest part of the move is over. It is still well underneath the positive directional indicator, so just because the ADX goes above 40 doesn't mean it can't go higher. It just most often that's about where the strongest part of the move is indicated of being over. But I can easily see this 190 target being hit. In fact, I'm curious about your thoughts on the metals. You can pick gold, copper, silver, whichever. Where do you think the metals go from here? Please leave a comment under the video. Let me know what your view of where metals go. You can even talk about Bitcoin too if you want, which we'll cover in just a minute. Some of you were asking about the Russell. We usually mix it up a little bit with the different markets, but we'll look at the Russell here, and you can see here that it's kind of hanging in there pretty well, which that's a little surprising to me. Small caps, usually a little bit more of a risk on type of a scenario, and we're really kind of in a more risk off type of a market at this point. But to see it hanging in there around 200 as significantly as it has been, that could give the bulls perhaps some hope that maybe we're starting to near the end of this downward move. We'll see. We still have that zigzag that I'm pretty cautious on because it's my favorite zigzag pattern. So that C wave extension looming down there around 400, I still think bears watching. But we have a bit of a triangle here on the small caps as well. So did we break down here and go hit that wave 5 target low? Or do the small caps break to the upside? That would obviously be a bullish sign, I believe, for the markets in general. But having a consolidation here in the wave 5, having a complex wave 5, it's not that surprising. The wave 4 is right at 38.2% on the fib level. We could break out of this triangle to the upside and still keep the impulse pattern to the downside. We could move up to a 50 or 61.8% wave 4 correction and still have a potential wave 5. But pretty impressive, I think, that the IWM has held in there really pretty much better than the market has. Well, one that hasn't done so well is the Qs, and we've talked about this. It's just going to be a rough time for the Qs this year, I believe. With interest rates going up, it's just tough for tech stocks. We did get a wave 4 labeling here right at the 38.2% fib level. So, I mean, all this Elliott wave Fibonacci stuff has all just really been spot on, even with the craziness that's going on, the volatility that's going on in the markets. And I can easily see this wave 5 being hit down here on the Qs, just because it's just hard to imagine a bullish scenario. That doesn't mean you can't have rallies. What is Elliott wave? It's a whole system of impulses and corrections, and you have them in both directions. You have impulse patterns and corrections when you have an upward impulse pattern, same thing on the way down as well. So here's Bitcoin, as I just mentioned, and it had a little bit of a bid here. Ran up to 44,000, but couldn't break it. And you know the deal with Bitcoin. We've talked about it numerous times. 4 is the magic number for whatever reason. We have 4,000 blocks here of support resistance. So we have resistance at 44,000, and then we have another level at 40, and then 36, which has held amazingly strong throughout all this. A couple of dips below there. Couldn't even close below 36,000, just kind of taking a look at, yikes, we don't want to go down to 32, so we just jump back up above 36. Some pretty interesting speculation on this move to the upside here, testing this wave 4 on the fact that people were positioning themselves in Bitcoin, thinking that over Russia maybe using Bitcoin because they got cut out of the SWIFT system and all for banking, etc., that may be type of currency that the Russians use, and people were trying to get in front of that move. Well, we've come right back down, couldn't break through 44,000. Now we're back right around this 40,000 at the time of this recording. This is right about where we are, right about 39,000. And so if we can't hold that, then back to 36 we go. One more time, see if we can hold it again. Wanted to show you that we did break below the 10-day moving average here as well, but it probably will give 40,000 a try. But we'll see if we make another run down towards 36. The VIX just continues to amaze. We talked about this last night in our insiders meeting as well, that to see this many days where you've had the VIX above 30 is impressive. Usually you get these spikes. This is the more norm when you get these big volatile moves, and then you come back down like both of these did. But now we're just kind of hanging around there above 30. So elevated volatility. I expected there to be elevated volatility this year. Not quite this much, but obviously the geopolitical world and what's going on in Russia and Ukraine, all that's playing into it. But the big intraday moves, and then you see all the stuff that occurs throughout the day, and we end with a doji on the day. So up and down, volatile moves intraday, and we close right back where we opened. So Monday might be a fun day to see how the volatility plays out. I hope you have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.